Good morning, good morning. How's everybody doing this morning? Happy Fed Day. As they say in the greatest city in UK, Liverpool, how we doing? You all right? Fatima, it is a live USA session. I am live, not a recording. No problem. Welcome. What's up, Jerry? How you doing? Kevin, you got your internet back yet? What's up, Miko? How's the Windy City? What's going on, Sean? Christian, I sent you some information. Take a look at it. What's up, Ed? How you doing? Oh, another Fed day, huh? Yeah, let's see if I can put some trades together. Kind of choppy, kind of slow. Oh, let's dig in. Just so you guys know who are trading at these places, um, on days like this, uh, all right, I'm gonna give you guys a little lesson in technology. The technology for retail traders isn't really that great. So if you're having brokerage firm troubles on a Fed day, remember too that there's increased margin today until the federal decision at what is it 2 p.m. Eastern time, right? So just remember that when you're trading, your fills might be different. Your software might have some issues. That's why generally Fed day you only take trades that are 100% there. You've got to be very diligent and manage your risk. Okay, enough me playing wet nurse. Let's get into it. Overnight inventory is long. It's almost 100% long. What does that mean? That means all of the inventory, all the time and volume has been over yesterday's close. So had we opened over 70.30, that would have been a big gap. So we've done a look above 70.30 and come back in. A full inventory correction will take us right back down to yesterday's close. And you could see there's yesterday's high. That's where all the shorts are trapped underneath that, right? And we've had 5 P profiles in a row. The short bid is right here, right? At yesterday's high, there's a seller at 20, there's sellers at 22, so it's going to go back and forth. Normal market behavior would be to correct inventory down to yesterday's close, right? And test that 7,005 level. We'll go show you that. This is the cost basis for yesterday. This is where 70% of their inventory is priced. This is the overnight from the night before. So you could see, right, Market profile traders would say value is moving higher. In real English, that means the cost basis of the goods are being marked up and successfully sold at higher prices for profit. Okay, that's the simple man's explanation of market profile. All market profile does is keep track of inventory, right? Our inventory is priced at a certain level, and market profile tells us, in essence, here's the inventory. This is the cost basis. These are evening and day sessions. And I just wanted to show you we have 1, 2, 3, 4 P profiles in a row. That's something that you generally don't see, right? So the shorts were trapped here, then here, then here, then here. So on retracement, we will be looking for that as your first level, right? So inventory is long, we look for a move down. Now, if inventory had been underneath yesterday's close, we would look for a corrective move up. Now that happens 60 to 70% of the time. But what if it doesn't happen? What if the market opens at 70.22 and goes straight up? Then the market's trying to tell you, psst, psst, psst. The normal business of correcting inventory is not happening right now because we got a lot of buyers and we would be idiots not to sell them at 38 than 13, right? Wouldn't you rather sell higher? Right? It's a profit thing, right? Those wholesale traders, they will try and sell as much as they can, as high as they can for as long as they can. And guess what? When they run out of buyers, they're going to put it on sale, just like Walmart, just like every other business. So that's what we're going now. We're going to see if we open on a gap or if we open inside yesterday's range. For swing longs, see how balance works? You know, I did this balance earlier just to show you guys. Right? I did a balance and I looked at, so I used these lows of these highs, and I took this as a cost basis, 69.23 to 69.63 quarter, and then you double it, right? So this is our 2 times profit. And, you know, not for nothing, as they say in Long Island. My 2 times cost basis high is 70.42. The high of the day is 70. So I'm off by 3 ticks. So how do I use that? Well, if I was long on a swing trade, I know that there's going to be, this is at 2 times profit. Good place to take profits. You guys feel me? You guys understand what I'm talking about? Here's a quick thing for those of you who are trading at Tradeovate. If your DOM is not refreshing, if your charts are not refreshing, don't trade. Real simple. Right? Real simple. Right? Do not, if there is a hint of something not working at your brokerage firm on a Fed day at month end, right? Do not trade. Right? That is what a smart person does. Don't force it and get stuck in a trade that you can't get out of. Right? It's the end of the month. The end of the month, you got to use the noodle. Right? You got to use what's sitting on top of your shoulders. Okay? So we're right at that previous day high. The short covering bid is the only thing that's keeping all of this inventory holding. If we break the previous day high, we're going to be looking for the close and then down to this 7,002 area. But you can see, ladies and gentlemen, that cost basis of inventory works. right? So I very quickly found out within 3 ticks that the market was going to slow down up here. Why do I do that? So I'm not buying this looking for some stupid breakout. I know that this is the top of a profit zone, right? So if I was long on a swing trade, or if I was long overnight, I know I'd be getting out here. If I wanted to put in a short, now I got a beautiful short because my stop, right? If you're a bigger trader, you could use 70.45 or 70.44, right? And say you short 70.38, you put your stop at 42.25, and then cover a little bit at 30, cover a little bit at 22. Get yourself paid, right? So that is a fail to look, that is a look above and fail because we went 3 ticks above this level and came back in. The sellers started price competing at 2 times profit, right? It's simple commerce. The chart is telling you how sales are going, and when they're putting it on sale is when you go short. Okay, you don't short the front end of the move. This is a fool's game. This is the smart guy and lady who short. They short the back end of the move when the sellers show their hand. How do you know when the sellers show their hand? Come to our room. We will show you. I will be happy to show you. Today at 11 o'clock Eastern Time, I am doing a execution lab for the members in our room, right? Simple, brother, right? My goal, right, is before I leave this planet is to try and get as many retail people profitable as I can. Because as you know, every time retail people get profitable, a market maker gets his wings, right? So I have to atone for all my sins. So that means it's good for you. I get to help you guys get profitable, right? If you understand the business, you're not going to take stupid trades. You're not going to make dumb business decisions. You're not going to trade without a stop because that's like having a restaurant and not paying your fire insurance, right? We will teach you how the business works. And this is what I do in my mentorship, and this is what I do in the class. So 11 o'clock today, right? We call them execution labs, price action labs, whatever you want to call them, where we go down and we dig into the execution. So you're not sitting there going, oh, this is all theoretical. No, right? All the theory in the world is not going to help you when you're getting punched in the face. And trust me, you're going to get punched in the face in this business, right? This is a contact business. Hey, Harris, what's up? You must be off rotation. What's going on? How's life in the world of brain surgery? Ah, cool. So do you see how we're just hanging out above yesterday's high? That's all short covering, my friends. So will that hold, right? Or will enough buyers come out that we take out 70.23? That's the first stop, right? So the chart you see here for people who are joining us, this is a market profile chart, right? Basically, it's a fancy half-hour candle chart where you can see inside the candles and you can see where the inventory is being acquired and disposed of. And now it's on sale, right? Then we combine that with a 1-minute candle wax chart and we draw out a cost basis, double it to the downside, double it to the upside. So now we can actually execute when our business setup shows itself. For example, this would have been a nice short. This is a look above and fail of 70.23. So how do you execute that trade? When it looks above and fails, you see seller. The next candle is all the way down here. So you short this and you put your stop here. So your stop is here. This is your short. You first cover here. You put your first buy order here. So when the market goes down and hits you, you get paid a little bit. Then you put your other buyer, like if you were short 3 contracts, cover 1, cover 2, cover 3. So as the market goes down, you cover. Now, what if the market does not go down and fill your orders? Then you know that you can cover the trade, right? You've got some what we call intelligence, right? So if you know that if you're short here and this buy order gets filled and this one gets filled, but this one doesn't, then you can go and close your trade and book your profit without having a big hairy fit. Now, after the fact, of course, is easier, right? But you're going to have to work on this execution, right? I suggest going long first to learn how to spot selling competition, right? But the method that we use is simple. We use plain, simple English. Sean, I just told you what the purpose... No, you got to listen to me. You're thinking profitable. Change that to business. So if you are short here, right, you use your orders to tell you whether the trade is working. Because right now, the way you're doing it, it's not working. Right? As you get better, as you build up a level of skill, you can hold trades longer and worry about profitability. First, learn how to ride the bicycle without falling off before you start trying to jump 3 cars. Get what I mean? Does that make sense? I want you to build up your skill level. Because to think about profitability when you start trading, or if you're not consistently profitable, that's not going to help you. Because you're always chasing profits and you're actually never building your skill. Make sense? Right? You could argue that's cool, that's fine. Right? If it doesn't make sense to you, that's fine. But that's how things work in the business. Right? So if you want to do this as a business, you learn how to do it. Right? Learn, once you start making money, once you start becoming consistently profitable, I promise you will take you to the next step. Right? Is it possible that 2 times cost basis, the algos slow down and create selling competition? No. It's really simple, George. The traders who are using yesterday's high as a stop, right? The large traders, they don't use hard stops. You can't use a hard stop on 1,000 contracts if I was short. So if I was short and the market came here, I'd put buy orders here. That's why. Now the algos are going to slow down because they see the buyers. Right? What are you going to try and do? If you see a buyer at 18, see if he'll pay 19. He moves his bid up to 19. See if he pays 19.20. Right? It's commerce, my friend. It's commerce. Right? So the algos will slow down when they see buy orders. Support is created by unfilled buy orders. Make sense? Keep it simple. Don't overthink this. Now, what you should be thinking, George, is that is a spot. Where's the trade? The trade is to buy above the previous day high and put your stop underneath that W, underneath that bottom candle, and then sell into the strength which is created by a lack of supply. That's the trade. Make sense? Because the sell orders that have come down here have found that there are buyers. And let's see if those buyers will move. And they did, look. The buyers are moving, following the seller, like a dog looking for a treat. Right? It's a very simple business. Execution is difficult. That's why we keep analysis and mechanics simple. That's why we call it a market, right? The purpose of a market is to distribute inventory, nothing else. And there's competition. Like you go to, what is that street in New York with all the jewelry stores? Those guys will compete against each other to sell you product. Same thing here. This is a sales chart. The sales chart is telling you how sales are going. Here it's telling you how sales are going on a half-hour basis. Here it's telling you minute by minute how sales are going. So we had to reduce price under 18 and a half, but every time we reduce price under 18 and a half, guess what happens? Buyers come into the store. Simple. Right? I know it's hard for a lot of people to wrap their head around this because you've been conditioned with a bunch of BS stuff out there, and everyone's talking to you about algos and math and quantum physics and string theory and all sorts of stuff that sounds really, really, really cool. But you're not going to make any money off of it. Right? And that's why consistency and profitability elude 96%, 99% of retail traders. Got to get paid. Right? The other reason that retail traders lose money is because they are accustomed to losing money. And we've normalized losing money. Oh, you blew up an account. Poor baby. Pat you on the head. Right? You shouldn't be blowing up accounts. That's money. If I gave you $100 and asked you to light it on fire, right? If I gave you $100 and made you burn it, you'd probably have trouble doing that. But that's what you're doing when you're trading. You're literally setting fire to your money. You just don't realize it because it's all electronic. Yeah, who wants to work with you if you keep burning money that you were given to make money? Right? In the industry, you wouldn't last a New York second. Nobody will hire you. So what I teach you in our room at Trading Syndicate is I teach you how to make a little bit of money so you get used to getting paid. Now, once you're used to getting paid every week, you're not going to make any stupid decisions because you're not going to screw up that paycheck. But when you're like, oh, I'm going to lose it anyway, right? Why would you trade intelligently? Right? 2 p.m., James. No problem. So if we were to open here, we're going to open on a bit of a gap, right? A gap means change, right? Which means the prices I paid yesterday, at the end of the day, I can no longer get the product for. That is change, okay? So if we do open on a gap, do we fill the gap? There is a short position here. That's why we have unfilled buy orders or bids, right? That's why the market stopped selling at 17 and a half. Not because buyers were defending price, right? That's one of the stupid things you hear. Buyers are defending price. That is probably one of the dumbest things I've ever heard in trading. How longs defend prices they stop selling? Right? You don't flip to the bid and start defending price here. That's how you lose $100 million in an afternoon. Right? So buyers will see sellers and they will raise prices. That's not defending price. That's business. Right? So that is created by unfilled buy orders. So had you been short and the market came down the previous day high, that's where you'd be covering, right? Make sense? All right, let's open this puppy up in 2 minutes and see what they got in the tickle trunk. See how they're taking that upper stop? So that means in the couple of minutes, this is the pre-open, right? There's some buy orders coming in that pre-open, and it stopped right where that stop we had, right? So they're selling into it here, right? The pre-open bid moved from here to here to here to here, but we have sellers at 23 and a half. So we are looking for a move to the downside. If that doesn't happen, we got to trade to the upside. Now, trading against your bias is one of the harder things I've ever had to do and learn. And that takes time, and we'll teach you how to do that. If you're short biased, and the market's telling you that the bid's moving higher, following the offer, if that offer is moving higher and the bid's following it, you don't want to be short that. Let the market open. Let's see what it's got. There we go. And we're off. Right? Inventory is not correcting off the open. Look for sellers at 27 and a quarter. Well, we hit the cost basis to the tick. Over VWAP, we're going to take the position under VWAP and go sell it. Okay, so let's see if we can stay above VWAP. We're going to backfill this candle. Right, that's the first move in the opening auction. Drives up price. They sell into it. Now let's see if we find that big buyer. Right, watch the open to see if we hold the open. If we hold the open and get back up over VWAP, it'll rotate higher. Right, if you are buying 27, 28, right, I'm long 26.94 and I'm selling them here. Right, I got my orders in. I'm long 5, 26 quarter, and I'm flat. Right, quick in and out, right? So I bought a couple here. I saw the bid held. I went long. My stop would have been right down here, and I sold into that candle. Now let's see what happens next. Hey, Meek, what's going on? Now 70.30 is a big level for me. Let's see if we can go tickle it with a little order flow here, right? Watch the offer. The red line is the offer. Watch 70.30 and watch that red line. Right? There's a seller there, right? The top of the candle is where the sellers initiate. See? So they're front running 30. Bids at 27, and we looked above, came back in. If we take out the bottom of that candle, you'll look for a 24, 25 target. right? This is not technical analysis. This is business analysis. See how there were bids there? There are bids there again, right? Offers lifting. There's a seller right here. I wouldn't trade this yet. I'd wait for direction. Watch this candle. If this candle can't get above VWAP, the sellers are going to step in and push price down. Just be careful when they're looking for the bid because shorts are trapped underneath the open. They might front run it. Okay, so if you're short 26 and a half, 26, put some buy orders in here just in case we run out of supply. And that's why, Sean, I was talking about, that's why you put your buy orders in because you can't move your stops fast enough. This way you get paid. See, look, boom, you would have gotten. You would have, if you were short 26 and a half, covered at 24, 24 quarter, 24 half, you're done. You're done, you're paid, that's it. Right? This is a 1 minute candle. So you do your work quickly. Right? You execute ruthlessly once you see your setup. Right? You only short when you see a seller. I saw a seller at 27 and a quarter. That's why I told you to short down to 24. But I said cover before 23 and 3/4 because that's where the buying's going to be. See? It's simple, but it's not easy. That's why you got to practice it. How do I size my position? Well, if I were you go with 3 micros, right? You go in with 3, and then you space them out. If you're around at 11 o'clock Eastern time, we'll be doing an execution class, and we'll dig right into this. These are great questions. Perfect. They're interactive. We'll be on Zoom. You get to ask questions, and we talk, and we go over trades, and we dig them apart. Man, we're only 5 minutes in? Feels like I've been talking for 3 hours. So obviously, Tradeovate's having some problems from what I hear. You guys can take the day off. Just chill out. I will post the link for the lab in the ES room, Fatima, where you were posting before. I do talk a lot, don't I, Dave? You know, what are the reasons? When I was okay, back into cost basis. Sorry, I'll tell the story later. Oh man. Okay, good distribution. Let's see can we correct inventory? Can we stay under 70.23? Right? If you do a little shorting here, right, your stop is going to be 23.24, right? I'd wait for the next candle, right? Give it another 20 seconds and see if the seller is still there. Are those sell orders done or are they complete? If they're complete, we'll lift over 24. If there's more selling to be had, we'll stay under 23. Wait for this next candle. That's why I have the timer there, right? Okay, there's a seller at 23. Sellers are at 23. If they start to lift, if you see that offer start to lift, then you got to start covering, right? If you're short, otherwise, pay yourself, pay yourself, pay yourself, ladies and gentlemen. Right? There's some bids at 22. Right? You see that offer lifting? Come on, let's take out 22. Right? If we take out 22, you're looking for a 21 and a half cover. If we take out 21 and a half, 20 and a quarter. Hey, Chadwick, how you doing? Yeah, the book is thin. It's pre-fed, right? Thanks, Taco. I appreciate your help. Now we're coming back into that cost basis. Next candle opens. Let's see, do the sellers continue? See, seller, seller, right? If they start to lift, uh-oh, where are they going to sell into this? Right there. If they lift over that, then you got to watch out for 23 and 3. Ooh, sell order might be done. See? That's why you put your orders in and you cover. So now we're going to clean out this 23 and 3/4. If we accept above that, you'll look for 27. If we get back underneath it, right, you'll be back down. Yes, indeed, today is a Fed day. So I recommend for retail traders to stop trading a good half an hour before the Fed announcement. It's at 2. You probably want to be flat before then. You don't want to be in a position just in case, right? This is an area where I'll let the large traders work this out, right? Right? Let them, you guys are familiar with snowplows? Let the large traders be the snowplow. Nice work, Badir. Nice work. Right, if we accept over 23, 24, then you can maybe take a little long. Right? I think my bias is screwing with me, but yeah, let's see. I'll wait for the next candle, though. You're familiar with snowplows, exactly. I guess Calgary. That is the preferred mode of transportation is a snowplow in the prairies. Oh my goodness. Oh. Actually, I saw a robotic snowblower on Twitter, on X. It's like, where was that when I was growing up? Yeah. See how it's choppy? There we go. Can we take out 25 and 1/4? There's a nice look below and fail. So if you're long 24, 25, sell into the strength. There's going to be a seller at 26, 27, just so you know. Right? So clip in and out. If you're not a fast trader, wait. Right? Yeah, the seller's at 26. So we're creeping up on VWAP. Boom! There's the VWAP tap. Right? And that's what we call rotation, folks. So we short when it does a look above and fail, and we go long when it does a look below and fail. And all we do is we're playing the rotations. Nice work, Harris. Nice work. Look below and fail. Right? It's the oldest trade known to mankind. Yeah, there you go, James. Now you're thinking like a villain. Maybe you guys should take this brokerage firm being down as kind of things happen for a reason. You know, do you really want to spend 5 grand to trade a mini today? You know, if there's money to be made, sure. Just make sure that your trades make sense. You know. Ugh. Let's see if we rotate back down to 25 or if we catch a bid. Now remember, we opened on a gap. The gap hasn't filled yet. So there's a bunch of unfilled buy orders down here, ladies and gentlemen. Right? So that overnight inventory correction that we're waiting for, it hasn't happened yet. We opened and we went down 6 ticks, found the bid, boom. Right? Now there are sellers here, naturally, because if I was long here, I'd be banging them out with both hands here. Right? So, and look how slow it is. Right? Now, how many people do we have trapped short underneath 26? Probably quite a few. So we're going to go up and tickle the 34s. Right? When a market fails to fill a gap off the open, take note of that. Right? Take note of that. The market's trying to go, psst, psst, psst. Don't short it down here. Right? Everyone's lining up to buy it. Right? Don't short it here. There's a lot of truth in my teachings. Well, thank you. It's just how stubborn you are, right? And how much you have to reprogram yourself, right? So if you're brand new to trading, that's helpful because you don't have years of bad habits built up that we have to flush out, right? We have to reprogram your hard drive, right? We have to, you know, we have to do a defrag, right? Think of old physical hard drives. You have to defrag them, run a virus, right? And then we got to clean out. We got to format your hard drive and put in good information, right? So the more, Harris, the more porn sites you went to in trading, the more viruses you're going to have in your hard drive, right? It does take time. But hey, where else can you pull up to a place and load up a truck full of money, right? It is a skill, unfortunately. As much as people back down, rotation back down to 23. Let's see if that open holds. Right now, I'm looking to see if we break the open, except under 23, and go try and tickle that gap. Remember, if you are short, there are going to be bids here, right? Yeah, it takes time. I know a lot of people, a lot of doctors, they went to school with us with finance guys, and the finance guys were partying and drinking when the doctors were studying. So they think finance people are like, the traders and stuff are just goons. But there is a skill to this. As we come closer to this little mini cost basis, they stop selling and lift the offer, right? There you go, James. Thinking like a villain, right? Thinking like a villain. You just got to develop your skill as a trader. You got to know when to trade, when not to trade. Look at the responsive buying when we took out the open, right? Staying under 23 and 3/4. Now, see, look how the offer is lifting, right? We went down, offered them low prices. What happened when the market went under 22? It brought in buyers. Why are there buyers? Because there's a gap there, and people are short underneath yesterday's high. So as soon as they see price go on sale, they're Johnny on the spot, buying everything they can under 22, 22 and a half, 23. As soon as the wholesalers see that, boom, they lift the offer. There you go. So this could be a look below and fail of 23/4 again and 3/4 again. Let's see what happens when the next candle opens. Okay? Tomorrow is month end. Right back up. See, this is a rotation, right? Rotate down, rotate back up. So what we're doing is we're rotating around cost basis. Tomorrow is T plus 1 to month end, James. It has to do with equity clearing. So if you sold 1,000 shares of Microsoft tomorrow, you could get the cash on Friday without paying any early settlement fees, right? It used to be T plus 3, trade date plus 3, T plus 1, 2, 3, right? Now it's T plus 1. So for retail and for money managers and all that stuff, month end is tomorrow. And for market makers, month end is Friday because they have to provide liquidity up until the closing bell on Friday. So tomorrow is month end, Friday is market maker month end. Has to do with the US clearing system. We trade an ES contract based on equities, right? So it's like taking a check into a bank and it takes a day for it to clear. Yeah, no problem. That's my specialty. My specialty is that whole clearing thing. That's where I spent most of my time as a trader, is understanding how the clearing system works. It's not confused, man. It's just taking a break. It's just chilling. Business is slow, right? Business is slow. Pretend you're working in 7-Eleven. It's 3 in the morning. You got that one hot dog going around the spit. Every once in a while, somebody comes in and buys a pack of cigarettes, right? It's slow. A slow morning, which is to be expected on a Fed day, right? right? So just relax. Take a trade here and there, right? You've got nice rotation around this 4 point zone. Look above and fail, look below and fail. The only thing is be careful because if we can't take out these lows, right, this price stability is going to attract longs. And they're going to go, oh, the gap's not filling. Let's go buy some, right? And the people who are short in this area, right, if they're short, they're going to start trying to cover. And the people who are long will start lifting the price. So be careful about that. Yeah, so you guys with Tradeovate, you got the day off. Go to the beach. That is a holiday. Right? See how it's attracting buyers? Right? That price stability. On this move down, we couldn't break the middle of the balance zone. Right? So the bid moves up. So you short sellers, you got to plan on that. Don't short it until it gets back under VWAP again. Because now we're going to take what we bought under VWAP and go and try and sell it up here. Seller up at 29.5. Not much to be done here, right? Will I please tell me once about the good LBF? Oh, yeah, that's tough, Moran. You know, and we'll work on that in the price action lab. This LBF, right, there's different kinds. Sometimes it takes a while and then it comes back up. Sometimes it does this really quickly. Now, knowing the difference between this and this is hard because you got to look at the inventory overhead and try and figure out whether it's going to take time or it's going to be quicker, right? But it's nice when you get a rotation because then you can see that this time it took less time to clean the market out under 23. See you, Jerry. Right? And you were having a period where you're doing really well, Moran, but then the market changed, right? The market has been very difficult, right? to trade consistently because it's always changing, right? It's always changing. And lately, right, you know, the market is taking some time. So what you should do, Moran, is you're in my coaching program. Schedule a call and we'll work on it. Right? You're in my mentorship thing, so schedule a call. We'll do a Zoom, and we'll work on it. Market maker inventory is just based on that inventory. It's only adjusted through order flow. Market makers pay brokerage firms to get their order flow. Right? So there'll be inventory long, and then they'll have some short inventory if they don't have product. Now, those are market makers. There's also size prop traders, partnerships who buy large positions and sell them into strength. Right? So those are, in the old days, they would be called independents that were on the floor. Now they're prop shops. So, Moran, getting back to your question, the good look below and fail versus the bad look below and fail. What are the differences? Choppier markets, right? Markets where the candles are small, so the business is slow, right? This has been a frustrating market because you really have to wait for that really good setup, and sometimes you'll miss it, and then you won't get another one for hours, right? So it's been a very frustrating market to trade for people. It's not been easy. I mean, I had the flu last 2 weeks, and this week is the first week that I actually started taking some trades. And I'm only trading on the micro because I haven't traded for 2 weeks. I want to make sure that I know what I'm doing, right? So, the people hate the term being patient, but we have to trade what we're given. I mean, look at this chop. So, Moran, this is a look below and fail, right? I would wait for the next candle to open. So right now, right, it's going back and forth over 23 3/4. Watch the offer. And if it starts creeping up over 24 and trading 24/4, 24.5, then you would be going long. Right now, no dice. See? There's no way I'm going long now because it's offered under my level. Call me when you get back over 24, then I'll be interested in going long. But you got to prove it to me. Sometimes I'll miss the trade. Here, watch. See, the seller is at underneath 23 3/4 now. If I was short from under VWAP, I'd be covering here just to take the money. Thanks, Brian. Right, if I was short at 26, stop at 27, covering at 24, maybe a little at 23, that's good money. 2-3 contracts on 5 to 8 on 2 to 3 points on 5 to 8 contracts. Without stressing yourself out. Right? Now, if you're a larger trader, I don't like holding to a gap fill. I'd let the large traders do this because I don't know what's lurking here. Right? We're getting some selling now, but I don't know where that bid's going to come in. So you could hold for the gap fill. But what if it doesn't fill the gap and it reverses on you? So if you were short 26 and you covered most of your position here, you covered one here as a lookout bid, right? And you covered the rest in the 21s, right? Just in case we accept back over 24, why would you let that profit go, right? Look, those sell orders are now complete. So Moran, you're looking for a look below and fail, right? This is hard because look at the size of this candle. So you got to wait till the next candle opens in 5 seconds and see. Now you might have missed the trade, right? So it's a difficult trading environment, right? So let's see now. Let's see if we can take that long again. Let's see if those sell orders are gone. So you buy a couple at 24 and a half. Go put your stop at 23 and a half, right? And put your sell orders out, right? I got a sell order at 25 and a quarter just to see. I'll sacrifice a contract there, right? And if those sell orders don't get taken, if we get under 23 and 3/4, right, I'm gone. Because if I'm long at 24 and a half and nobody wants to buy 25 and a quarter, what the hell am I doing holding this inventory? Get rid of it, right? That's how you got to scalp. See, stopped out, right? This is a choppy market. Now that they flush those people out under 23 and 3/4, let's see if it can get back up there. Otherwise, it's going to flush lower. So the market is telling us right now that it's choppy, right? It's choppy, it's choppy, it's choppy, right? The look below and fail is not kind of working now. Now, all of a sudden, somebody could come in and try and buy 5,000 contracts and it'll rip. And we'll be like, God damn, then it didn't work, right? So it's very frustrating, right? That's okay, right? You got to roll with that frustration. Frustration is your best friend in this business because a lot of the times it's telling you not to put capital at risk, right? If the market's frustrating and choppy and hard to trade and you're not getting it right, just take a break. You know, take a couple of trades, see if they work. If they don't work, take a break. Yeah, because frustration, right? What that does is it makes you overtrade and make bad decisions. And then you start losing money and then you get more frustrated. And it becomes a cycle, right? If you stop the cycle, right, it'll lower your blood pressure, right? Sometimes you're going to be wrong, right? I was wrong right there, right? I was wrong. So admit you're wrong quickly and get out. You're going to be wrong a lot. And you've got to not let that affect you. Right? The market's giving you information. So at that time, the course of business that you were planning is not working. Right? This way, the worst thing too about this business is the physical and emotional toll it takes on you guys. Right? That's why everybody runs towards trading psychology. But there's no amount of psychology that's going to help you from not understanding how the business works. Sometimes we got to not do business. Sometimes the wholesalers are making money and we have to sit and watch, right? And I understand that's frustrating. But it's better to be frustrated and not lose money than to be frustrated and lose money. right? I'd rather be frustrated and flat or lose 20 or 30 bucks than lose $300. Right? This is not for me. I won't trade this. Right? This is just a choppy mess. Let me use another analogy that you guys might understand. If you want to go shopping, would you rather go shopping, considering, you had the same amount of money, would you rather go shopping in a nice area of town where the sales girl gives you a latte or a drink, right? And you sit in a nice chair, right? And you get sold stuff. Or would you rather go into the hood, right? Get robbed. They throw you in a garbage can, take your wallet and your watch and your phone, right? It's up to you. It's your money, right? Right? You got to be a little bit of a price action snob. Let's see if we fill the gap. I think we're going to fill the gap. The old mustard trick, right, Espill? Sometimes in this market, we straight up jack you, right? Just give me your money. It's like wearing a Rolex and walking around London. Not a good idea, right? Sometimes you just find yourself in the hood. That's why you got to get the hell out. Try and stay away from the hood. Gap fill. There we go. Finally. See, it's taken us, right, 40 minutes to correct inventory. At least a little bit and fill a gap. Now let's see where the bids come in. Do we get back up over the previous day high? The levels are working. That's why I draw these levels for you folks. So you can see where the cost basis is. This is 2 times discount. And then if we stay under 16 and 3/4, that'll be 4 times discount. So this is simple. You don't need a math degree, or you don't need to be able to code algos to figure this out. Now that we've taken out that stop, everyone who's long above it should start puking. But if there are bids here, let's see if we can get them to pay up. That's healthy. We fill the gap. Right? Ooh, filling single prints. The shorts are getting filled. They're seeing buyers, right? So they're dropping their bids. So if you're shorting down here, your reference point is the overnight high. I mean, yesterday's high. If we get back up over 16, 17, be careful. If we get back up over 18 and a half, that's where your risk is, right? Your risk is at 18 and a half. As long as the sellers come in and stay underneath yesterday's high, you're okay on a short. Sometimes we fill a gap and do this and bounce out of it because so much buying comes in. So we left one single print, right? One lone short holding the whole market up. Let's see if that breaks. Now, in a normal market, we should break 15 and come down to 12. Let's see, right? Those lows, let's see this low. Come on now. Sell it like you stole it, baby. There we go. Come on. Look at all these bastards covering here at 16. Come on, drop your bids. Share with the sugar bear. Come on. There we go. You short 16, do some covering. You should have your buy orders in. Make sure you get paid. Get paid, get paid, get paid. Right? Right? Sell it like you stole it, Ed. That's why, my first boss on House Street, and his name was Dwayne, he taught me two things. He said, JJ, never pay for stock. They give it to you for free. Number one. Number two, he taught me, I never saw a bid I didn't like. You're long at 5, somebody offers you 5.25, 5.5. Sold, baby. Right? You show me a bid, I'll fill that bid. Right? There's always the next trade. You don't have to hold trades for 30 points just so you can feel like a rock star. Get paid, get paid, get paid. Right? We are vultures. Right? We are not hedge funds. We are not fund managers, portfolio managers, analysts. Right? We are regular people who need to pay our light bill. So if you make $100 on a trade, go pay your sell bill. Rock stars usually don't live long unless these guys like the Rolling Stones. Those guys must be getting blood transfusions or something. Nice work, Espill. Beautiful. Now we're looking for 12 and a half, 12 and a quarter. Right? Gentle, slow, short. You can see, right? If I still had some contracts, right, I'd put my bids around here. This is where the inventory correction has to tag the close. Beautiful, James. Beautiful, beautiful. Look at that. And this is why you cover. Because these pendeos come in, one big short covering candle, somebody goes to buy 4,000 contracts, the order book just empties out like the Red Sea, and boom, we're back up over 16. So take your profits, get paid, my friends. Because at month end, you never know who is desperate. Right? That is a desperation candle. Right? That is somebody coming in to buy back a short position and the market going, ooh, let's take advantage of that. So they filled the poor bastard up here at 18. How are the gold bugs doing? Oh, I gotta roll over this gold contracts, don't I? What's the gold contract? Is it J? I think so. There we go. Oof. SPY over 696. Hey, what's up, Rolly? How you doing? All right, sellers at 20. We're gonna backfill this move now. Watch back and forth over the previous day high. That'll tell us about the order flow. Looking for bids now. Watch the offer at 16 3/4. Okay, under 16 3/4, sellers are competing. Let this candle play out and we'll see what the next move is. Right? If you are short, use this yesterday's high as your stop. Put some bids down again, 14, 13, right? If your bids aren't getting filled, if the market doesn't fill your bids, it means that there's no supply and you're going to have to pay up. It's really simple, right? If you're short 17, 18, and you got a 15 bid in and it's not getting filled, go pay up. Watch the offer, right? If you get filled at 15, there you go. Watch the offer. Can we stay offered above 15 or below it? Right? So if you're short 16, 17, right? Your 15 bids got filled. Let's see if your 14 halves get filled. If not, you know what to do. Get paid, get paid, get paid. You guys understand what I'm talking about? This is how you find real order flow, by watching the offer. It's a simple candle chart with the bid-ask indicator. Right? When the offer is moving up, you don't short it. When the offer is moving down, you can stay short. Offer is moving down, that means sellers are competing and lowering price to capture the buying. What is the difference between finding the bid? When you find the bid, you find out where the buyers are. And if there's a lot of sellers competing, you will fill the bid. Why do I charge 20 bucks to teach people how to trade? Because I have other people to pay in the room. Do you have something against making money, Joey? I mean, it's not a charity, right? We charge $20 a month, right? Just so we could pay overhead. We have some people who work for us so they could get paid a little bit. Why do I charge for working? Do you see how ridiculous that question is? I get that question all the time, right? The other thing is, if we let everybody in, you know how many bozos I have in my room? You know how many people that $20 keeps out? Oh, man. All right. Look below and fail of 16 3/4. Right. Should I give him my Danny DeVito? What are you, a communist? Right. Thanks for the laugh, Joey. I appreciate it, brother. I appreciate it. What are you, a frickin' communist? Oh, man. Right. So that's why I charge. Right. We have people who do work for us, who do marketing and advertising. Right. They're our family. You don't want us to feed our family? Man, this is slow and choppy. So, half an hour from now, we will have the execution class in the room. I will post the link. Right? Right. We will see you at 11 Eastern Time. Let's not beat up on the guy too much, okay? He asked his question, he got his answer, right? The stop is underneath JT Ferreira, right? So if you go long here, right, you put your stop here, right? And then you sell into the strength here, right? On the look above and fail, you sell here, you put your stop here, right? Price action lab is an execution lab. Yeah. So if you want to learn how the business works from somebody who's taken 200 companies public and dumped billions of dollars of stock into the US markets, if you want to learn the business and how to trade in a simple, common sense manner without all the mumbo jumbo and bullshit, right? We will legitimately teach you how to make money, right? We'll get you consistent. We'll teach you good business habits, right? So you don't take stupid trades, right? I love teaching. So the story is the reason why I started the room, right? After my heart attack, I was I was I went back to look after my mom and I started dating my high school sweetheart, this girl that I was in love with. But she had one rule, no stock talk. So I couldn't talk about the business when we were together. So I was bored, I couldn't talk to anybody. So I started the trading room because one of my partners died and my other partner stole a bunch of money and ran away. So there was nobody to do work with, there was no business and you know, I've been doing this for 34 years, used to doing work and you know, so yeah, I lost my best friend to COVID. And so this room gave me a chance to talk about the market and talk to people because I hate sitting in a room alone trading. It's boring, right? So I miss people. I miss telling stories. I miss having a laugh. You know, when you do deals, you know, you have a great time. You know, you make money and you're talking and you're laughing and you know, people are telling stories like the time that one promoter in Vancouver stole a bunch of stock and they come and they tied him to a tree outside his house and they cleaned out his house and took everything. You know, stuff like that, right? So none of that was all gone, right? You know, so it was nice to talk to people, and that's why we have our podcast is called Confessions of a Market Maker. You can look that up. We're on YouTube. You know, we've had Jack Schwager and all the big traders on there, and you know some business people as well. You know that are fairly notable. And I just like talking to people. I like teaching. I like learning. I learn something new every day in this business. And that's why we're here, you know. And I generally care about people. And, you know, being on the other side of this and selling a bunch of stock and really dumping stock into the market, you know, it's like I say, every time a retail trader makes money, a market maker gets his wings, right? So I'm here for the karma credit points. Right? So thanks for your questions, Joey. I don't mind. You know, when you guys challenge me, that's good. It makes me better, right? It makes me better, right? Don't get crazy, but you know, I don't mind having discussions, right? I got no secrets. The only reason I hide my face is because my clients are billionaires and nobody knows that they are, especially the governments. So that's why their secrets die with me. That's the way it is, right? So thank you very much for being with us. I appreciate you guys. Come join us on the Trading Syndicate. We'll teach you how to make money. We'll teach you how to, you know, look after your family and pay your bills, right? Thanks so much. We will see you in half an hour in the room. I'll post the link in the Live ES room, and it will be recorded. Yeah, standard deviations move. I like to trade fixed references. I use VWAP to get out of trades, and if there's a standard deviation, I'll use it to try and get out of a trade, but I don't use it for initiating because it's not a fixed reference. It's kind of like riding a horse trying to shoot a target. I'd rather be stationary while trying to shoot a target. See you, Dave. Get some rest, brother. Okay? And we'll see you folks in half an hour in Trading Syndicate. Thank you, everyone. Have a wonderful day. Don't take candy from strange market makers and watch your risk. Okay? Bye for now.